Hi, I'm Rick Albert, and welcome to The Key to the City of Angels, the podcast where we unlock the secrets of Los Angeles real estate. With over 300 real estate deals under my belt, I've seen it all, from house hacking strategies that build wealth to helping clients close multi-million-dollar deals in one of the most competitive markets in the world. Every week, I'll bring you expert insights, market trends, and inspiring success stories to help you navigate the LA real estate scene. Whether you're a first-time buyer, an investor, or just curious about what it takes to thrive in the City of Angels, this podcast is your guide to making smarter decisions and achieving your goals. So grab your keys. It's time to unlock your path to prosperity in Los Angeles real estate. Hello, everyone. Rick Albert here with another amazing episode of The Key to the City of Angels. Super excited here to have Devon Aguirre of PadSplit. Thank you so much for coming on.
Yeah, thanks for having me.
And what we're going to be talking about, which I'm excited, is almost, how do I word this? It's almost like the next step after house hacking. Because house hacking is you buy a house and you rent by the room, but then what do you do from there? So touch into how you got into the space and kind of what PadSplit does, and then we can go more into the industry.
Yeah, so a little bit of background on me. I'm a Southern California native. Grew up in Long Beach, went to Long Beach Poly High, went to Cal State Long Beach. I've been in the real estate industry ever since I graduated college. Started off in the title insurance space, worked there for a couple of years, always at startups, real estate startups, and now I'm at PadSplit. And I manage the Southern California market for PadSplit, but I also help investors turn their properties into PadSplits, acquire PadSplits in other states as well. But I wear a couple hats. I'm a marketing person for PadSplit. I like to call myself a PadSplit evangelist, spreading the good word of PadSplit and co-living around, while also helping investors. Like my other hat is helping investors get from 0 to 12 doors on the platform, and then we have another team that kind of takes them from 12 to 100. So that's my role over here.
Great. And then the concept is what? So you have a single family house, and instead of renting it all to one tenant, you might rent it by the room, basically.
Yeah, so co-living is really just the fancy word for rent by the room, which has been around for forever. It's not a new concept by any means. People have been renting rooms in properties for forever. And yeah, like at the end of the day, that's what it is. We are a marketplace that helps connect people who want to rent their property out room by room with the renters themselves. And co-living in and of itself, what it does is it helps investors reduce vacancy loss, increase cash flow, by renting out each room for 70%, say, of what a one-bedroom apartment goes for. You can generate more revenue than renting out the whole property to like a family or something like that.
And it's funny because I've talked to clients about this model, because most of my clients actually do this model. And they're like, is it more complicated? I'm like, the way I look at it is it's almost the same. Let's say you have a 4-bedroom house. It's almost the same as having a fourplex. The only difference is one kitchen and maybe 1 or 2 bathrooms. Like, it's similar management. Is that somewhat accurate?
It's different, right? So I will say, it's at the end of the day, co-living isn't some magical tool where it's going to solve every problem you have with a property or something like that. But what we do at PadSplit is we also encourage people to add additional rooms to the property. So that's where it's a little bit different than the traditional co-living setup. We say if you have a living room, you can put up a wall and turn that into an extra room. And now instead of just generating the extra revenue by renting each room in the house, now you're saying like in a 4-bedroom, you're turning it into a 5-bedroom. And so now your revenue and your cash flow goes up even more. But at the end of the day, like there's differences and nuances to managing a co-living property. But so like by no means is it a passive investment, 100%. But
none of this has been passive.
Yeah, exactly. Real estate in general is not that way unless you have a rock star property manager and you pay for it. And then you can get your mailbox money. But it has its own risks versus rewards, but usually it makes a lot of sense for a lot of people.
Yeah, so let's go into that. So you adding rooms, which again, I've had clients do, without permits, architectural plans. Like if I have to go that extra mile, like how do you navigate that?
Yeah, so when it comes to adding extra rooms and things like that, like in a living room, for instance, right? Like I've talked to a couple homeowner or property owners, investors in Southern California, and at the end of the day, like we encourage all of our homeowners or our property owners, investors to follow all local laws when it comes to permitting. At the end of the day, we're also not the permit police, so we don't verify
You're
that
not gonna
stuff.
rat. You're not gonna rat
Exactly.
them.
We're not going to go in there and pull
Start
permits and make
blackmailing.
sure. Exactly. But we recommend it because, especially if a municipality might have a rule against renting out by the room, which offer a legal structure that kind of gets around a lot of that. But if the city is going to come in and have an issue with saying you're running a boarding house, an illegal boarding house or something, having an unpermitted wall probably going to be a rough thing to have them discover also, right? So we
Yeah.
recommend doing that. But what I usually advise my hosts, we call our investors hosts, like the owners of the property, is I say if it's easy to add a wall, right? Like maybe the living room, it has 3 walls around it, you just need to put up that fourth with a door. That's where you really want to be, and especially if you're looking to acquire something, because if it involves like you have 1,000 square foot house and you're gonna be adding on another 1,000 on the back or on the going up to 2 stories, that's a huge capital investment that co-living isn't just going to solve that and just generate stupid returns and make that make sense for you. And there are cases where it might, but usually it's, hey, if you can put up this wall for $2,000, you're going to see ROI on that within a couple of weeks, and it's going to make sense.
Yeah, I actually had a client do that in Hollywood. So what they did, I helped them buy it. It was each unit was 2 bedrooms. One of them had a dining room. So they actually did it with permits. It actually enclosed the dining room into a third bedroom. Cost them like $8,000. Like we're talking plans, everything. This was a few years ago, but it was kind of like, okay, but you just added 20 grand in value, right? It was a no-brainer.
Yeah.
But in terms of when you rent by the room, is there a general rule of thumb in terms of like how much more you can get in rents?
Yeah, it's all going to vary based on the location, right? Just like with anything in real
Sure.
estate, it's what the market will bear, right? So co-living, and this is a conversation that I've had to have a lot with some hosts, where just because you're doing co-living doesn't mean you're just going to make a whole bunch more money unless you set it up.
Right.
I've had a lot of people that bring me 2 bedroom condo and they're like, hey, I can't get my $2,000 for it, or I can't get $3,000 that I want a month for it. And I'm like, if you try to rent those rooms for $1,500 each, it's going to be tough depending on the area. And so you might end up having to go less than that. Now you're making less than the 3,000. I try to be super transparent with people I talk to and do more consultative approach of saying, hey, this is what the numbers would potentially look like. But for an easy example, what I say is, say if you were to rent a 4 bedroom house in LA for $4,000, right? I know that's a little tough.
No.
Say it's $4,000 and you were to rent each room for $1,200. Now you're looking at $4,800 in gross revenue for the property. And then if you were to add a fifth bedroom, now you're looking at $6,000. My math was right there, I think. But yeah, that's the easy rule of thumb example. And I do property analysis a lot with people where I'll walk properties with them. Like we just had one come on board in Huntington Beach where it was going to be 4 bedrooms, and I walked the property and I said, hey, like you could add a small room in your living room here, and it would be significantly cheaper than the other rooms because it's a small room. But
Sure.
even then, if it costs you $4,000 to add it and you're getting $800 a month, it pays back pretty quick. And now it gives you more wiggle room on the property. So you don't have to worry about vacancy or anything like that as much.
Yeah. So then how do you handle things like utilities? Because a lot of my clients bill it back. But I know as you start getting into bigger units, right, if each bedroom's a unit, sometimes it can get complicated.
Yeah. And so like I always tell people like co-living is possible to do by yourself, right? You don't need PadSplit for one property. Usually where we come in is we help people scale. But on the short end of it, everybody does it a little differently if they're doing it themselves. What we do is we have the host include utilities in the cost. So we set it up as like the member, which is the tenant, pays a fixed weekly price. And that's part of their incentive is there's no variability in the costs. So it's not like during the summer, the water bill is going to go up and the electricity bill is going to go up. It's like they have a fixed cost, but that's priced into the rent. And that's where we have that consultation, make sure it makes sense. But most co-living properties, the utilities are going to be covered by the owner just because it's hard to divide that out by 4 or 5 renters. And that's where you get like those social tension issues. Like I've rented rooms with, roommates before in my past, and everybody's fighting over how much the AC gets ran, right? And stuff like that, which does help keep them honest a little bit versus you covering the utilities. But that's where like we recommend using a smart thermostat and just keeping the temperature consistent. And then that way you reduce that stuff. California is pretty efficient when it comes to utilities. Like you can't even buy a high flow shower head. You have to go out of state and black market to buy a high flow shower head. The way I found out about that was going on Amazon trying to replace a shower head, and this can't ship to California. I didn't even know. And
Yeah.
then it's just because it's high flow. But like when I talk to people out of state, that's one of the things we recommend is do a low flow toilet, low flow shower head, and LED light bulbs. All that stuff helps reduce the overhead of the property and help save costs for sure.
Yeah, because that would always be my biggest concern because utility costs can be high. And I'm not normally a huge fan of like solar panels, but it could be one of the few instances where it could make sense. Right, because you're
Yeah,
building extra for utility costs, but then it's somewhat offset. The problem I have with solar panels, a few things, but one of them is I've done the math. It usually takes about 5 to 8 years to get your money back,
hmm
and that
especially if you're
tends to be a
financing them. And then that's a
oh,
whole
if it's
nother ball
financing, it's
game.
probably long. Yeah, oh yeah,
Yeah.
and don't even get me started on leasing. Oh my gosh, it's horrible. Where have you seen these types of renting by the room models work best? Is it just like anywhere versus near a university for college housing?
So as far as like with PadSplit, like we see that really you can put a co-living property anywhere. It just whether or not the numbers make sense is the important question, right? Like,
Sure.
yeah, sure, you can put something on in Palm Springs, right? But there's not the density out there that there is in, say, like downtown Riverside or closer to the city of LA. As far as will it work? Yes, if you're willing to lower the price enough, right? You'll get somebody to move in there, but then you're probably not going to make very much money. So what we recommend is we say find areas that are commutable or walkable to bus, like metro stations, bus stations, that type of stuff. If you have a spot, if you're going to be out of the city a little bit more, make sure you have parking. That's going to be helpful because people are going to have to drive to work. If you are looking at inner city more, as long as you're by some bus stations or by some Lime scooter hangouts, stuff like that, that helps. But really, at the end of the day, like our demographic particularly is not really students. It's actually our average age on the platform is 34 years old. So
Wow.
it's, yeah. So a lot of people think, oh, yeah, what is this, like short-term rental or something like that? And really, like the way we run it is it's more mid to long term. So our
Mhm.
average stay on the platform right now is about 9 months. And it's really just
Interesting.
people that are looking for something more affordable than a studio or a one bedroom. Divorcees, bartenders, waitresses, Uber drivers, all those types of people that I'll be honest, like when I first got into this business, I was like, who's gonna rent just a room in a property? Like that's odd. But I have a family, I have little kids. Even if I was renting, like I own my home and I'm fortunate to have one, but like even if I was gonna rent something, it would have to be a house, like a whole house. Like it just wouldn't make sense. So I'm like, what? But then you start seeing all these people that are doing this underneath society. It's like a hidden layer of society. And co-living lets you help you not only as an investor, you can make more money, but you're helping people access more affordable housing because I don't know, studio apartments, one bedroom apartments, it's crazy what they've gotten up to rent wise.
Oh,
And even in LA right now, like we're seeing prices $1,300, $1,400 a month, $1,500 a month for a room. And those aren't even in the best neighborhoods. But because the utilities are included and the way we do it is they're furnished, it makes a lot of sense for these people. And
yeah.
I
What do
was
you
going
mean
to
by
say,
furnished? But go for
so
it.
yeah, in order to have a property on PadSplit, it has to be furnished. So not every co-living property is going to be like that. If you go on Zillow and look for a room for rent, some of them are just a vacant room, right? You bring in your own
Mhm.
furniture. Have them furnished so that way it makes it so much easier for people to move in and move out. Because now you're
Mhm.
not having to bring in a moving truck, everybody help you move, everything's in there, ready to go, and there's a lot more ease of access. And that's why we do that.
God, and that makes sense. Like for my ADU, because originally my wife and I lived in the ADU and rents out the main house. So when
Mm.
we moved out, I was like, first of all, the bed frame was from when like I had that bed frame for years. So that thing is IKEA. I'm like, you're not moving that anyways. But a lot of the furniture we bought for that space anyways. So look, why don't we just include it? And so what I told prospective tenants was like, look, the furniture can stay or it can go. I'm not going to charge you more for it. I'm not going to deduct it from your deposit, but I'm also not going to replace it. So if it breaks, if whatever, it's like you're on your own. And people are like, cool.
Yeah.
And I've had two tenants in there and they've been totally fine with it. So like when you mean by furnished, because like you're not just furnishing the room, right? You're also furnishing the kitchen, you're furnishing the bathrooms. Where do you draw the line?
Yeah, so the way we handle it is like there's a base setup that you can do, right? The bare minimum requirements that we have to let your property be on the platform, and then there's everything above that that is we can be an amenity. It's just extra you can do if you choose to. So like our bare minimums are in a bedroom, you need a bath, or sorry, a bed frame, nightstand, and then if the room does not have a closet, it needs a wardrobe or a dresser. right? And there's also other regulations that we have. It has to have at least 2 outlets and it has to have smoke detectors. But that's just like just code stuff, right? If we in two modes of egress, and every time I say that, people say, "Oh, that's just safety code stuff." And I'm like, "Yes, but you have to say it because somebody will convert a basement with one
Oh
staircase
yeah.
out for all the rooms, and it'll be a fire hazard." So as far as furnishings in the rooms, that's the bare minimum. We don't require linens or anything like that. The
Oh,
expectation is that
interesting.
our members bring their own linens. Some of our hosts do provide those, at least the initial set, maybe, because they're already
Hmm.
staging the pic for the pictures, and so they're already including that. They're like, I already bought the sheets, so I'll just leave them there, and then once they turn over, they'll have the next person bring their own. And then as far as kitchen, you need your standard appliances: refrigerator, stove, microwave, but you don't need like pots and pans. It's not like Airbnb where you need like to give that full house experience. It's more so like these people are going to move in and they're going to live here, and you can provide those things, right? So when I talk to someone about pricing and they're like, "How do I price this out?" I say, "You have to put your foot in or put yourself in the shoes of the renter." And so, would you pay all this money for a place that looks like a prison? Right now, if you're charging prison rates, then it's okay. We're not trying to
Right.
create slumlords here, but at the end of
Sure.
the
But
day,
the point's there.
yeah,
You
it's
get what you pay for.
really exactly. And we have some hosts that dress them up like Airbnbs. And
Yeah.
I tell them, I'm like, okay, ease it off a little bit, but definitely don't put anything in there that you don't want to ever break or replace. It's still a rental property at the end of the day. I wouldn't put in your grandma's antique wardrobe in there that you're going to be so upset if it gets a scratch on it. And then pots, pans, dishes, all that stuff, cutlery, you don't have to. You can provide an initial
Hmm.
set. Same thing with bathrooms. You don't need towels or anything like that. Obviously, you need your bathroom, your fixtures, and all that stuff. And
Sure.
what we recommend is having an initial stock of like toilet paper and paper towels, just to get them going, so that way it's functional as they move in. But
Hmm.
after that, you don't have to provide that stuff. And what we find is that people treat these rooms like their own little mini apartment, and that's partially the reason why we recommend walling off and turning into extra rooms any extra common areas, because common areas are where we've seen over the last 7 years of operation that I think it's 8 years now, but is that's where conflicts happen. So somebody's hanging out, hogging the living room TV for 3 hours after work, and everyone else is, I'm frustrated.
Hmm.
So by getting rid of that, or if a host really doesn't want to convert that space because they just want to test it out, like it's not required by any means by us, but I just recommend like not furnishing it, because you put a couch out there, you put a
Hmm.
TV, it's just gonna people you're gonna have a buddy sleep on the couch, and it's gonna upset the other roommates. And so by getting rid of that, you just reduce that volatility zone essentially. And then we recommend having like a dining area, like a little dining table somewhere to discourage them from eating in their rooms. At
Hmm.
the end of the day, we find that most of the members will just, they go to work, they're working people, they come home, they hang out in their room, they do that. They don't really want to. Some houses have a better culture and they all want to hang out with each other and become friends, and that's okay. So you can encourage that for sure. But like at the end of the day, they're just looking at it like an apartment.
It almost feels like the dorms, right? Because the dorms don't have a lot of common area.
Yeah. And so
It
that's,
was really just stuff the students in there, and they're too busy anyways for whatever reason. Have you seen issues with like evictions? People stop paying. You're right, because that's always the
yeah.
biggest fear here in LA.
Yeah, like nationally, we have a 1.2% eviction rate, which is low. And we have a lot of steps that we personally do to prevent the evictions from happening, right? Like at the end of the day,
Okay.
nobody wants to go through an eviction. So we
Right.
try as hard as we can to not do that. So we have a collections team that'll call people, try to get them to pay if they're behind. And then we also, what we'll do is we actually will ban somebody from our platform for life if they go through an eviction in a pad split.
Sure.
So it's kind of like a social credit system there, right? Like you don't want to lose access to the network. We have 25,000 rooms on our platform as of yesterday.
Nice.
Especially like LA is a little bit newer of a market for us, but eventually we'll be at that same level. Like Atlanta has 8,000 rooms, and that's where we started. Like you're not
Hmm.
renting a room in Atlanta pretty much unless you're renting a pad split. So
Yeah.
that's where this growth trajectory is going. And so that's where that kind of is super enforceable. Then on top of that, like we find that if somebody's not going to pay, they'll just leave. And that's partially why they're furnished as well, because they don't have to move out really. They came in with a couple pieces of luggage, maybe with some clothes, some personal items. They'll just leave. They'll say, "Hey, I lost my job or something. I'm moving back in with my mom." They'll just go. They don't want the effect on their credit. Every once in a while, I get a bad apple. So I won't say this is the perfect solution
Yeah.
to anything. It's still
No.
investing, right? There's still some risk, but we have a couple strategies that we do as well to help prevent it getting to that point.
I also wonder. assuming they know, if there's any sort of like social stigma with the other roommates. Oh,
100%.
the guy in room B is getting evicted. Like, and
100%.
now if I'm the person getting evicted, I'm like walking in and out, like almost like a walk of shame. But
Yeah,
it's interesting
definitely.
because like with a lot of my rentals, when like for example, I just recently had to do an eviction, and I asked my property managers, "Did you try to get a hold of the person?" Yeah, we've tried to call, text, post on the doors. Like, look, if they're like, and they actually asked me to do cash for keys, but this is out of state. I know I know the damage cash for keys has done in LA. You have to do it. But I was like, no, you guys try to make an actual effort to help this person. Because I probably shouldn't be saying this. I don't, if someone, hey, look, I can't pay, I'm not going to go through the eviction process. All right, let's come up with an agreement for you to leave. Look, can you catch up? And then we'll just end the lease. Like, what good is it for me to force someone who can't afford it? So
Exactly.
yeah, if they're in a room and they're not paying, it's like, look, or we just call it.
Yeah. And so that's what we see. There is that stigma for sure. Like with the way we set it up, like their agreement only gives them exclusive rights to the bedroom. So they're sharing the
Oh,
common
interesting.
areas. So the owner can still go in the common areas. Even so, our standard rule is give a notice of 24 hours, but like
Sure.
technically you don't have to. And we always recommend following the local laws. But, and I always tell hosts, like, so technically I go there every day, right? And I'm like, you could, but you're gonna have a lot of turnover. So just keep that in mind. You know,
Yeah.
if the owner's
Well,
hanging
it's
on,
borderline harassment.
yeah, like you're hanging out on the couch every day, like it's gonna get weird. So I recommend against that. But at the end of the day, it's much different for somebody to squat in like a whole house with a family. So like they have
Yeah.
nowhere to go, and they're like, yeah, I can't pay my rent for a reason, so I can't go live in a hotel. You know what I mean? I lost my job or whatever. My kids are all here. I'm just gonna fortify up in a co-living environment. You're in your room and yeah, like you said, you're walking through the kitchen, everyone's like, dude, you're blowing this up for all of us because our landlord's going to sell this house because he doesn't like to do this, and this is the last affordable place I have, so I really like this.
Interesting.
You're rocking the boat. So there's a lot of that social pressure to not
Interesting.
be there. And then like I said, they can just pick up and go. They have their stuff. There's not much stuff there for them to take, and they don't have access to a full house to lock themselves up in. And then kind of what you mentioned, like at the end of the day, cash for keys is a lot cheaper to do with a room than it is for a whole house. Back to my 4 bedroom example. Say you're renting that 4 bedroom house to a family for $4,000 a month. They stop paying. You got to evict them or do a cash for keys. What's the cash for keys going to be? It's going to be crazy, right?
Yeah.
$20,000 or something. Oh,
The last report that I saw from the LA city controller, because you're technically supposed to report it, was something around 24,000. But honestly, that feels low because I hear stories of 40 to 60,000 for
yeah.
cash for keys.
And so with a room, right? And say they're paying $1,300 a month, $2,000, $3,000 is going to be a pretty big chunk of change for that person.
Yeah.
And our policy is singles only, so there's no kids involved. There's not as much like emotion as much of it. These people are looking at it more like business. Obviously, like I said, you still have those issues, but sometimes bad apples. But if you were to give somebody like a single person $3,000, that's going to get them a hotel for a couple weeks, something to get themselves back on their feet, versus having to pay $60,000. Like that's nuts. And I get it, it's the cost of doing business, but that's wild. I didn't
I
know it was
know.
that high.
So there's a couple of arguments. Some people think it's extortion. I would make an argument that it's partially,
Yeah.
but also if you have a tenant that's paying below market rents, right? For them to move and pay double, triple, quadruple what they're paying, they actually almost need that money,
Yeah.
right? I have clients who want to buy multifamily in LA, but because of rent control and whatever reasons, like there's people paying, no joke, $500 a month for a 2 bedroom. Like I
Wow.
see that all the time, 500, 800, 1,000. So when that should be going for 2,000, 3,000 or more. So if you're them, it's not that I don't want to move. There's no amount of money.
Yeah. And same thing happens on the purchase side when you buy your house, right? I can't ever leave my house now. I bought my house in 2021 and I'm trapped here forever. Same way.
Yeah,
Maybe in
people
the
are.
future some changes, but
I'll help you with
it's a
that. Don't worry.
similar.
We'll talk about it.
Right.
But yeah, but you're right. That becomes part of the problem. And I think that's so when it comes to the cash for keys, it's a rough. I remember I was telling people, I was like, look, you could take out a HELOC and use that for the cash for keys. And then because the reality is if you can get double or triple the rent, that's more than going to cover the cost of that HELOC.
Yeah.
Oh my, some people are like, Rick, that's actually a really smart idea. That way, because for those who don't know, home equity line of credit, you're only paying on it once you use it. So you can have the line of credit, then don't issue the money until after they move out. So you're not paying on it. But then I did have some people that were super pissed. Like, why should I have to pay them? This is extortion, whatever. But point being,
I think at the end of the day, you just have to take the ego out of it. Because
for sure,
that's where I think people get hung up. Is they're like, it's the principle of the thing. But if it takes 9 months of you losing market rent now that you're potentially staring down the face of, is that $50,000? I don't know.
Yeah.
However long the eviction takes times the new market rent of $2,000, you could be looking at a significant chunk of change that way.
Yeah. When we did with that out of state, part of my thought was there was a couple of issues I had. One is I'm almost sabotaging the next landlord by not doing the eviction. Because keep in mind, they were saying like the cash for keys was like $500, which I know sounds like wild, but that doesn't move the dial much in a bank statement. And I really don't feel comfortable screwing over another landlord with a bad tenant, and they would have no idea. Versus here in LA, I see all the time people are asking me like, hey, this tenant doesn't make a lot of money, but they have so much money in the bank. I'm like, it's because they probably just did a cash for keys.
Wow. Yeah.
That's why they have the 10. That's why you have to look at that's really why you have to look at the last, like, I do now 3 months worth of bank statements. I want to see how long the money's been there. So if you all of a sudden have an influx of 30 grand, like, why?
Yeah, either that or your street pharmaceutical rep, right? What are they?
Absolutely. For sure. Yeah. So it's something doesn't feel right. But that was part of the reason why I didn't do it out of state. And I also, knowing that there's almost a culture now doing cash for keys, I didn't want to be that first person to start that culture elsewhere.
Yeah.
It's especially when you give them a shot to talk through. But bringing it back to this, I guess theoretically this could work for any property, but are you seeing I don't really see this as condos, right? Like, because condos, you can't really add bedrooms. Condos have HOAs versus a single family home, multifamily. Where are you seeing this rent by the room space?
Yeah, I will say, and we were talking a little bit about this before we hopped on this, is that the market's interesting right now. Like, I've had a lot of people reach out to me to talk about doing a co-living project with their property, that like 4 or 5 bedroom houses that have been sitting on the market for rent for 90, 100, 120 days. And they're just either not able to fill it, or the people applying are just not qualified. And they have to either really adjust their price, or they have to try something else. And so that's where we come in, is even if we don't help you make more money, we might as well we might be able to at least get you the rate that you're looking for.
Sure.
Like, yeah, I want $3,000 a month, but I could probably fill it if I went to $2,200. But co-living can help me get $3,300. So it's not a whole bunch of more, but at least it's closer to that $3,000 that I wanted. So stuff like that. But as far as what makes a good property in LA, I would say, single families tend to do better, but that doesn't mean multifamilies don't work. Single families that are 3, 4, 5 plus bedrooms, usually like it's tight at 3 bedrooms. It's okay at 4 bedrooms, 5 plus, you're doing great. Like, I just did a case study the other day on a property near Boyle Heights that was 7 bedrooms as is. It needed some work, like it's halfway through a renovation. You can tell like the floor's torn up and stuff like that, but nothing major, unless once you actually get in the inspection period, maybe you'll find something crazy, and that's why it's still on the market. But 7 bedrooms, you could easily add 2 bedrooms to it because it had 2 living rooms. It was a 2-story house. So now you're looking at 9 bedrooms. When I ran the comps on what this property would rent for, now it was a little bit difficult because it was 7 bedrooms already. It's rare. I was generous and ran it for around $5,000 a month for the neighborhood. When I added the 2 bedrooms and comped it out for units that we have in that zip code actively rented out, the gross revenue on the property was like close to $11,000 a month. And so between being able to rent it out $5,000 versus $11,000, and that was being super conservative on the numbers. Like, I'm assuming you're getting no premium for having private bath bedrooms, which 2 of them did, stuff like that. And because I don't get into the expenses when I do these case studies for like when I do presentations and things, because everybody has their own thing. Some people are going to buy cash, some people are going to finance these things. So I just try to present conservative revenue so that you can get an idea. And then the way I always tell people is I say, these are properties I find on the MLS that have floor plans. So I'm looking at a real niche specific group of properties. I usually look at like 2,000 square feet plus, at least 2 bathrooms, because like we have a bedroom to bathroom ratio max of 4:1. We recommend 3:1, but 4:1 is the max. And so if you have a 3-bedroom, 1-bathroom house, like adding a bedroom to that is going to put you at the top end of the ratio, as well as if that bathroom, something happens to that bathroom, like everybody's cooked in that house. So
Yeah.
that's where we recommend not doing a one bathroom house. But 2,000 square feet where you have room to add bedrooms, that's where the value add is there. So if you're like a flipper or something like that, or an investor, buy and hold person, once you start looking at it with a co-living lens, you're able to expand that buy box just ever so wider, that now you're able to buy things that nobody else sees value in, right?
Yeah.
And so you're like, oh, this place has a really big living room. That's cool. A fix and flipper might be like, oh, whatever, no big deal. But now you're like, I can add 3 bedrooms here. This place is going to be cash
Right.
now. So that's the example. So there's a lot of opportunities, I think, in all over Southern California. Like a lot of the older homes in core LA that are like 1,100 square feet, 800 square feet, like those might be tough and those just might not work. Same thing as condos.
Yeah.
You just really, where you're going to make a lot of money is either if you have super low debt service to where you bought the house 10 years ago and your overhead's cheap, or if you're looking to acquire something that just has that ability to add extra space. But one strategy I've seen a lot of my hosts in LA do is they will have a single family house, 4 or 5 bedrooms, to where, like I said, you're in that good, not great numbers, or as far as like cash flow goes, but then they put an ADU in the back. And I tell people all the time, studio ADUs are not going to work. They're just not as good on our platform necessarily, because you might as well just rent it
It's
out
no
long
different.
term. Yeah, exactly. Like we can get exposure to it, but people aren't really looking on our platform for that. We'll try it if you want, but you're probably gonna make less money than if you just rented it out. So then they pad split out the front house, and then they'll just either Airbnb or long term rent out the back of the ADU, and that usually makes a lot of sense for a lot of people.
Yeah, and I guess that kind of makes sense because, like, even I remember once, this was it last year? I think last year, there was this house sitting on the market in Pasadena, and it was 5 bedrooms. And I remember showing it to one of my investors, and we're like, this seems like a no brainer. It's Pasadena, it's been sitting on the market. And then I think there's an economies of scale kind of issue in the traditional rental market. Like, yes, there's a lot of demand for 3 bedrooms. Yes, I think 4 bedrooms is actually the magic number for houses going forward, right? Builders do it, right? Builders are building 4-bedroom houses. They're not building really more than that. But I think as you start getting to like the 5, 6, 7 bedrooms as a traditional rental, there just isn't that kind of demand.
Oh yeah, for sure.
Just why do you need so many bedrooms?
Yeah, personally, I have 3 kids. I'm about to have my 4th in November. So
Congrats.
I've started. Yeah, thank you. I have a 4-bedroom house, and I've started looking. Okay, well, I want to see what a 5-bedroom house looks like, a 6-bedroom house looks like. They're hard to find. You know what I mean? So right. I get it. Yeah, and so now that people are having less kids, there's not that huge family anymore. I think, yes, those bigger bedrooms, unless there's like super high end luxury, like Beverly Hills, 34-bedroom mansion or whatever.
Yeah.
That's all.
But those make sense, right?
Yeah,
like,
exactly.
Why wouldn't you, in case you want a change of scenery? I get it.
Yeah, exactly. But when it comes to like your standard residential, yes, I think those 5, 6, 7 bedrooms that are like kind of unique, they do tend to they need a niche buyer. And like what you were saying, like, especially if you're looking to buy and rent one of these things, like a 4-bedroom house, similar example, right? Your $4,000 a month 4-bedroom house. Essentially, you're getting $1,000 per bedroom, whatever the square footage of those rooms are. Right? Sure. You start going to 5, 6, you're not going to get another $1,000 per bedroom. You might get $500, $600 a room, and then it really starts diminishing. So with the co-living model, as long as the rooms are similarly set up, you're probably going to get a very similar rate. If you're comparing a 100 square foot bedroom to an 80 square foot bedroom, that's going to get a different rate entirely. But if you're able to add similar sized bedrooms, you can really just copy and paste that dollar per square footage that you're getting onto another room.
Yeah, and that would make sense. And it was funny because like when we thought about that property in Pasadena, I looked into the multiple listing service and actually found that they had bought it recently. They had been trying to rent it and couldn't get it rented. And that's why they put it back on the market. Which it happens.
And one of the benefits of co-living in general too is say if they're trying to rent that Pasadena house for $5,000 a month, every month that you don't have it filled, I know it's not really costing you $5,000, but it's an opportunity cost of $5,000 a month.
Oh yeah.
So 6 months on, $30,000 you just lost. With co-living, you say you don't even add another bedroom to that, and you have 5 rooms. If one person moves out, you have 4 other people paying you. So you have 5 streams of income. Yeah, now you have 5 streams of income in that property. So you reduce the risk of that vacancy. And then that's the same thing for an eviction, right? So everybody's terrified of evictions in LA. But imagine if you go through an eviction in a 5-bedroom with a family in there, you're losing all that revenue. And then if you go through an eviction with 1 room out of those 5, the other 4 are still paying you. So
N-
that's one of the benefits.
Now, have you had city, because technically it's a single family home. This is multiple families. I might make the argument, considering that we're in California, how do you define a family? But I'm curious to get your guys' thought, because I'm sure this has come up before.
Yeah, actually, where we started in Atlanta is where we faced a lot more heat than pretty much anywhere else, and we found that a lot of those laws against unrelated occupants were
Right.
antiquated and had racist history. And so what we actually litigated a lot of those rules in Atlanta and working to
Hmm.
change them all the time. But we've never had a pad split get shut down over unrelated occupancy because we have a lease
Hmm.
structure that we implement that almost turns it into more of a corporate housing structure rather than
Okay.
just like a boarding house where you sign individual leases with the individual people. And I think that's another benefit is that like we offer a little flexibility on the tenant side that rather than finding a room through Craigslist or something, and you're gonna have a random Craigslist encounter, now you're renting or you're going through a legitimate company that's
Platform.
vetting the other tenants and also offering you that flexibility to where if you don't like it, you can leave. You're not trapped into a 6 month lease with these strangers or a 12-month
Hmm.
lease with these strangers. And I know that was difficult for me when I did it. I was locked into a 12-month lease. And so if I wanted to leave after 8 months and I was in college at the time, what if I want to go home and live with my mom? What if I lose my job?
Yeah.
This offers that flexibility to say, okay, I'm not going in all in with these strangers. Like I can have some flexibility there.
Yeah. Now, and that makes sense. So then how does the management work? Because part of the reason why people like just having one tenant is you're managing one person. And we can use PadSplit as an example. Are you guys are you guys property managers effectively?
No, so we actually don't do anything physical with the property,
Okay.
right? We are just the platform. We advertise the listing. We help screen the members, fill it up. We handle the payment collection. But when it comes to the actual physical property manager, property management, we kind of leave it customizable to the host. And we do that across the platform in its entirety.
Sure.
But you can either bring your own property manager to the put in and plug them into your portal, or you can self-manage. And if I'm talking to an investor and they want to do a co-living property, I tell them, okay, the first one you can probably self-manage. The second one, you're
Yeah.
probably going to need a property manager. And if you're doing 4 or 5, 3, 4, 5, you're definitely going to need a property manager because I'm speaking with somebody right now in Riverside that he called me and he said, hey, like I have a co-living property. I think it's 6 rooms. I have 5 of them occupied, but I want your help to fill that last room. And I said, well, it sounds like you're doing great without us. Like, what made you call me? And he goes, actually, I want to do this again. I'm in contract right now to buy a second one of these. And having done it, yes, I got it up and running by myself. I never want to do that again by myself. Because he was like, it was a pain in the butt trying to find these people. And every time you'd have somebody leave, you got to spool up this marketing engine all by yourself again. And doing that, yes, by 6 times, it's tough. And that's what we're really good at. So we help people do that and help them scale. But at the end of the day, the management itself can be handled by the host. Some of our hosts live in their properties and they manage it that way.
I
Some of
understand.
them will have a property manager. We in all of our core markets that we work in, we have local property managers that we work with to help do the physical management. Like even in LA, we have a property manager. I was actually just talking to her this morning. We work really closely together and we refer people back and forth to each other. That she came from the Airbnb, like short-term rental property management space. And she
Mm.
says she loves this 1,000 times easier because it's a lot easier than all that turnover. And a
Yeah.
traditional property manager might say it's a little bit more work because it isn't just, oh, 12-month lease, call me if there's a leak. You know, I mean,
Yeah.
there's a little bit more to it. But at the end of the day, we have hosts that use her and have a property on PadSplit, and it's like mailbox money for them. You know, that's where you get what you pay for, right? If you want to
Yeah.
any real estate, if you want to have somebody manage it for you, you got to pay for that service, but it'll make it 1,000 less headaches for you.
So let's talk a little bit about the vacancy, because that's been the big topic of discussion right now with investors, right? Things are just taking longer to rent for a variety of reasons. A lot of people aren't moving. People who are moving aren't well qualified. What are the vacancy rates and how long are things taking to rent? I know everything is market specific, but I'm interested to get a general idea of what you guys are saying.
So, like on our platform, I think I mentioned we have 25,000 rooms for rent on our platform nationwide.
Mm-hmm.
We are newer to LA, so I think in Southern California we have a total of 100 rooms on our platform. We just started in April. We're scaling pretty fast. We'll probably double that number within a month and a half here, and then it'll roll like a freight train after that. But like last month, we added like 1,500 rooms. But I say all that to give context, right? Like at the end of the day, our occupancy numbers change because we're scaling, we're adding more inventory and things, but we usually maintain it around the 85 to 90% platform wide. But and a lot of
Okay.
where occupancy is interesting, an interesting stat on our marketplace is that we don't set prices. So if a host comes on and they're like, I want to charge $6,000 a month for a room, no, we won't stop them technically. Somebody like me will tell them, hey, this is a bad idea,
Yeah.
but they could do it. And so that affects some of those stats. But if a property is priced right, and that's what I do is I help investors and hosts price their properties. If they price it, they fill it quickly. We had a property that we launched in Huntington Beach 2 weeks ago. They were 80% occupied in 5 rooms. So 4 of the 5 rooms filled within 2 weeks. So
Nice. Okay.
what our standard that we like to achieve is like we know what works in all the markets that we're in. So if you're priced right, your listing set up correctly, you have good pictures and good description,
Sure.
you will see your first booking in 12 days or under, or 15 days or under, and then you'll be 80% occupied within 45 days or under. If it's not happening, that means something's on our end that we need to do. We need to advertise a little bit more or do something like that. That's like the general rule of thumb.
Yeah, that's what I've told people. When it's a rental, whether it's a home for sale, almost like any product, if something's not selling, it's either the marketing efforts or the real estate agent, or it's the price. It's always
Exactly.
one of the two. So what I've always told people is, look, I'm going to send you a list of everything I've done for marketing, so that way, if we have to review the price, you know it's not me.
Yeah. And so that's where like sometimes I have to have tough conversations with people. I'm
Yeah,
like, hey,
it's not a
what are
great
your
conversation.
what are your goals here? Do you want to fill this property up? If so, I think you should go with our recommended price. If you want to just wait for the highest paying customer, then that's okay. But you just have to be willing to foot the bill for your mortgage for 90 days, whatever. Like I just had a conversation earlier with somebody in Vegas that just onboarded a property recently. And she was like, hey, why haven't I gotten any calls or not calls because it's all done through our portal, but why hasn't anybody reached out to book this since 3 days ago when we went live? And I go, actually, based on our market statistics in the area, the rooms are booking that fast. They're like I think the statistics for that zip code were first booking within a day, 80%
Hmm.
within 9 days or something. And I told her, I was like, let me look at your listing. And I looked, and she was like 30% over our recommended price. And I said, that's it. So I
Mm,
was like, what do you want to achieve here? Are you trying to fill this property fast? She goes, yes. And I go, oh, okay, then yes, drop the pricing significantly, get that 30%
yeah.
down. And that's where I help people because sometimes like when they're just listing on our website, they don't really get it. And they're like, I'm trying to, because we also collect payments on a weekly basis. So sometimes that can complicate people's math.
Ah,
And so they're like,
interesting.
oh, $200 a week, that's $800 a month. And I'm like, not really, because there's only 1 month out of the year where there's only 4 weeks in the month. So it's a little bit more than $800. And that's where I advise them, set them up for success to say, here's where your pricing should be. And if that number doesn't work for you, then maybe this solution doesn't work for this property. Like at the end of the
Right.
day, there might be a different property in your portfolio where it does, but that's where I like to be super transparent there because at the end of the day, like we don't want somebody to do this and be unhappy because that's going to create a bad experience for our members and for them, and it burns our reputation. Like we're not just like throwing stuff against the wall to see what sticks. It does take some hard conversations sometimes.
Oh yeah, that's always been the tough one, especially when even on the resale side, when people like, have this appraisal. I'm like, the appraisal doesn't mean anything. That's
Oh
just one
yeah,
person's opinion.
yeah. I did a small
Uh,
stint as a loan officer for HELOCs
oh,
specifically,
okay.
and during that time, it was so funny because people would be like, "Oh, when I bought the house, the appraisal said it was 650 or whatever, and the purchase price was only 600. So I should be able to go get a HELOC on the 650." And I'm like, "That's not how that works, unfortunately." You know what I mean? And then especially when people really start looking at appraisals, like, why do they always match the purchase price? Like that stuff. That's
Yeah, you
you
start to see
know.
some of that.
Yeah, exactly. So it for the people that aren't in the biz,
Yeah,
like I will say I see this stuff every day. I've been in real estate since 2014. I'm a broker myself as well. Unless you really live it and breathe it, that's why you
yeah,
hire an expert like you, Rick, or something like that, where somebody who knows the pulse and knows everything, all the ins and outs. Because I talk to even my family, and people are like, "What's the interest rate? I don't know. I haven't bought a house in whatever. I don't know."
30
And
years, whatever
I'm
it
like,
is.
yeah, I'm like, come on, guys. That's all I talk about is real estate. What do you mean? And
Yeah,
I just know that I'm plugged into it, and not everybody is.
yeah. That was always one of the big challenges. Is like for some of the stuff when it comes to negotiating, like I already know where this is going to end up. So then I used to actually try to speed it up, But then my clients weren't liking that because they didn't quite get it. So then I started slowing down, which worked. And then I think, was it last year? I think last year I had a client who was like me mentally, where they're like, we already know where this is heading. Let's just go there. Then they start, right?
Yeah, and it gets so complicated because there's a lot of emotions involved, and I get that. And so
For sure.
when
And
we
it's their
look at it
baby,
with like
right?
business, yeah, we look at it like
Yeah.
business, and an investor does. That's what's nice about working with investors is they know exactly the number. It's like all numbers. And they're like,
Yeah.
if I don't buy this property, I'll buy two more somewhere else.
Oh yeah. I have two clients that buy out in Riverside, and I don't, because I'm based here in the LA area, I don't really drive that much out there. It's an hour and a half drive each way. It's a little bit of a schlep. But with one of my investors, I helped him buy two out there now. And for the second one, I said, look, here's the deal. We'll do the drive, but you're going to promise me that you're always going to write an offer.
That's a good call.
I was like, I don't care if it's a stupid low offer, but you'll write an offer. And he did that. He committed to it. And we only went out there twice and we got a property.
Well, there you go.
So it's cool.
You lit the fire.
Right? Yeah, I was like, look, like we saw a house. He's like, dude, this house sucks. I'm like, but you're going to write an offer, right? And he's like, I committed to writing an offer, but it's going to be a crappy offer. I'm like, I don't care. Because he was renting by the room. So we're like, look, he's like, because there's really no way to add bedroom. So we're like, then we have to work with what we have now, don't we?
Yeah.
And we didn't get the house. I don't care. We made the efforts. No, I definitely get. In that respect, it's easier working with investors. But the hard part is some people will, on the emotional side, because they'll pay that premium, sometimes it does make it easier in that respect. Right?
Like, I'll go 10,000 over because I just really want it. Versus
yeah,
an investor,
I love the front of the house.
Yeah.
Which another question I have is there's certain like emotional things you can do to a house that actually bumps up the rent, or it would lower the vacancy.
Exactly.
Right.
So yeah. Like,
so what are some things you've seen?
There's a lot of stuff that you can do to make it, because really in the name of in co-living and in renting in general, like tenure is the name of the game, right? Getting people to stay so that way you have less turnover, less vacancy, things like that. And that's what's amazing is we don't own these properties on PadSplit, right? We work with investors, so each investor does it a little differently. I've seen them put mini fridges in the rooms because that's a way to reduce fighting over the fridge. I've seen people put TVs in, like these amenities. There's one host that we know that he has pizza delivered to the house every Friday as just a way to build that community. Yeah, and it costs him $20 or $30, but it keeps everybody happy and like stuff like that. That it's just the little things. And then we also see one of the best advice I've seen from an existing host on our platform has said, find somebody in the house that can be like the house mom or the house dad, essentially. And like you take care of them, you give them like a gift card or something like that. They're going to snitch on all the people doing bad stuff in your house, and they're going to help just take care of things. And so you can give them a gift card, you can give them a little discount on the rent. Some of our hosts have had like some of the members do the landscaping as part of a way to get lower rent, and then that helps reduce your overhead on the property. Stuff like that. So it's really customizable, and that's what's fascinating about co-living in general is you can do a lot of things. And I will say it's amazing. A lot of investors just want to talk about money, but there's so many investors that I talk to that are like, I actually want to make a difference too. I don't mind making extra money too. That's great. But I also want to make a difference. And co-living does really help make a difference for a lot of people.
Yeah. Like I remember I was analyzing a property out of state, and it was a baseball field that wasn't really used anymore, but I thought it was. I found out later it was like a historic field they used for concerts and stuff. But I remember talking to my realtor before making an offer. And I was like, is this the type of situation where like I should include like season tickets as part of the rent?
Yeah.
Are there little things that could really make a difference? Or like for some of my clients, especially on the university side, I'm like, you can go on Amazon and find a bike rack for $50. Does it make sense to install a bike rack?
Yeah.
Or a Metro Pass. I have a client who is looking to buy a property near USC, and there's one that's probably just a little outside of walking distance, but it's right across the street from the Expo line.
Yeah, and so that's where, exactly, like you'd be a great host, Rick, because you're thinking outside the box in a way. Good, because
I have a really cool property. I know you're going to want it.
At the end of the day, like that's what it takes is like by being creative, doing fun things like that, like people appreciate that and they want to stay. That's the downside. Some landlords, some investors are too hardcore, and everybody's different, right? Some people are going to just treat it business only and that type of stuff. Very rarely do you get that person that loves that and they want to stay a long time because of the fact that they are treated so cold. But it's just different. You own a 200 unit apartment building, you probably have to be that way. right?
Yeah.
But if you own a fourplex or something like that, you have some more wiggle room.
Yeah, and again, it does, to their credit, it does come down to the numbers. You're not, some of this stuff when I talk to people, I'm like, look, you're not going to get more rent necessarily, but you are going to lower vacancy. So to
Well,
your point, if vacancy is $2,000.
How do you value goodwill? That's hard for a lot of people to imagine.
Yeah. When they take care of the place, you get less phone calls.
I've dealt myself with landlords who I never hear from them and everything's fine. And I try to keep up with the property then because I'm like, I don't want to get kicked out. And then I've also dealt with landlords that are up in your business and you're like, oh, I'm going to call you every time there's something wrong now. If you're going to be pushing me all the time to raise the rent and stuff like that, then, and like I said, I've been on both sides of the equation. I know exactly how that feels. And I'd much rather live in your property, Rick, than the other one.
I have one vacancy coming up in Birmingham, Alabama, if you're interested.
Okay, there we go.
No tickets, but that's okay. But no, I mean, and especially with the rent by the room, because what I have talked to people about is you are creating some sort of sense of community, right? Like you have a host that delivers pizza. Like these people are going to see each other every day.
Yeah.
So
exactly.
Do you set like house rules? Like
So
quiet hours, things like that?
Yeah, so on our platform, there is general house rules that all the members agree to, and that's what we call the tenants as members. They have a membership agreement that they sign with us where they agree to the basic house rules. But we do allow our hosts to set their own rules as long as they're not like it can't be anything crazy, like illegal or anything like that.
Sure.
But you can set your own house rules, like I'm lacking of words right now, but we do allow for a lot of customization on that end for sure.
Yeah. No, that'd be interesting. All right. I really appreciate you doing this as we round up to the hour. What are some like last minute things that people should be considering with renting by the room, co-living, things like that?
Yeah, like at the end of the day, I would say just even if you're just even thinking about it, give me a call because we can talk about it. Like I said, I'm not some high pressure salesperson that's going to sit here and jump down your throat. I'm going to consult with someone, see if it makes sense. If it doesn't, no worries. And one thing that I like to do too is if you're already doing co-living in Southern California, reach out to me because I love to learn more about this and see how it's going in the different cities, like especially as we expand the market. Like I do a monthly meetup in different cities throughout Southern California. My next one is going to be in Lakewood. I call it PadSplit and Pizza. I buy a couple pizzas. I have a couple speakers that come out and we just talk about co-living and PadSplit. I think my link tree will be on the link for the podcast.
Yeah, we'll get that out.
Yeah, so if you click on that, you can sign up for my meetup. I post everything that I do that stuff. Like, come talk to us because I just love to hear from other people doing co-living because I think it's such a fascinating strategy, and I always want to learn more things that can make it more successful.
And the reality is, you're de-risking because you are renting by the room. Again, I'd rather have one unit vacant out of 4 than the entire thing. So I wouldn't be surprised as long as the laws are there and everything there, that's probably what will end up in a lot of cases for some of these properties. So how can people get a hold of you?
Yeah, so you can give me I'll just give my cell phone number. I'm used to it, having it out there as being a title rep. I already get all the spam calls. It's funny. A lot of my family and friends are like, you answer spam calls or like, you don't just automatically block those people? And I'm like,
you never know.
I can't. I've had my number out there for years. You never know who it is. Could be spam, could be your next client or something like that. So give me a call, 562-673-3673. That's my cell phone. You can text me or click the link tree. It'll have my contact card. And then you can also book a call with me on there. I do a monthly webinar as well, where I talk about PadSplit in Southern California. And then I also do my meetups. And so I love to have people out, like I said, mix and mingle, just learn what everybody's doing out there.
Perfect. All right. Well, thank you so much for coming on again. I really appreciate it. Thank you all for watching or listening, and I'll talk to you guys next week.
Thanks, Rick.
Thanks for tuning in to The Key to the City of Angels. I hope you found today's episode helpful as you navigate the world of Los Angeles real estate. Whether you're looking to buy your first home, expand your investment portfolio, or sell in this competitive market, I'm here to help you succeed. Let's connect. Visit my website or follow me on social media to learn more about how I can help you achieve your real estate goals. And if you're ready to take the next step, don't hesitate to reach out. I'd love to work with you. If you've enjoyed this episode, be sure to subscribe, leave a review, and share it with someone who might benefit. Together, let's unlock your potential and make your real estate dreams a reality.